When it comes to qualifying for the best credit cards or even renting an apartment, your credit score matters. While establishing a good credit score is a vital piece of your overall financial picture, there are many common misconceptions about what does affect your credit score. And in this video, we'll be talking about them. Hey guys, welcome back to our channel. We compile the latest credit card news for you to keep up to date with. Our videos are guaranteed to keep you coming back for more insightful and amazing content. So make sure to like, comment, and subscribe to the channel so you're always up to date with our latest videos as soon as they're uploaded. And so without further ado, let's start with today's video. The first modern payment card made its debut in 1950, and it's come a long way since then. Information and advice on correctly using a credit card have been passed around for as long as the credit card has existed. Over the years, many changes to and variations of the credit card have surfaced, and an abundance of myths. Today, many people across the country use their credit cards daily. The chances are that a good percentage of cardholders have heard these myths and believed them at one time or another. Many of these myths, if followed, could cause credit card users more harm than good. Credit cards are so popular for a reason. They've made life extremely convenient and are easily accessible to almost anyone, from students to retired people. In addition to providing a range of rewards and exclusive experiences, they also help build your credit worthiness. There's probably no better option than a credit card for emergency purchases. However, there are a lot of common myths when it comes to managing payments, understanding credit terms, and keeping a healthy credit score, which can sometimes be challenging for the average user. Using credit cards responsibly can help consumers, especially young ones, establish a good credit score. But making infrequent purchases with a card may lead lenders to close them. According to a survey from the Consumer Federation of America, consumer knowledge about credit is on a significant decline. Only 66% of survey participants, for example, know that keeping a low credit card balance helps raise a low score or maintain a high one, while 85% knew this in 2012. Here are a few credit card myths. Number 1. You should never get a credit card. One of the most common misconceptions about credit cards is that it's better never to get one. According to this myth, regardless of how you use your card, credit cards ultimately lead to bad credit and poor financial habits. Fact: having access to credit is necessary to build your credit score and history. Good credit is the result of responsible use of credit products. Therefore, technically you don't need a credit card to build credit. That being said, a credit card is a great and manageable way to boost your credit and build a strong credit history. Of course, it is true that with a credit card, you could potentially accumulate bad credit if you use it irresponsibly. Credit cards don't automatically condemn you to a life with debt and bad credit, but bad habits and lack of financial responsibility can. To achieve good credit and successfully use your card, you must be responsible and disciplined. Number 2. One late payment won't damage the credit score. The National Foundation for Credit Counseling survey reported that nearly 25% of Americans do not pay their bills on time. These consumers may not know that payment history represents a whopping 35% of your credit score. Credit issuers can decide how forgiving they are for missed payments. Even if you successfully pay the late fee, unless the issuer removes it from your account, your credit will be impacted by the late payment. Thinking paying less than the minimum is better than nothing? Think again. An on-time payment that's less than the minimum decreases your credit score and makes it more challenging to qualify for increases or additional lines in the future. You can set up auto bill pay to avoid the repercussions of late or missed payments. Number 3. You only need one credit card. It's always wise to apply for credit judiciously, as applying for multiple cards in quick succession can cause your credit score to drop. But if you already use credit responsibly, there are valid reasons why having more than one card might make sense. Here are 3 to consider. What if your credit card becomes compromised due to fraud or is declined? You'll have a backup. Having another card on hand can provide backup and peace of mind. Plus, having an additional card means you'll have an option if a merchant doesn't accept the one that you carry. You can maximize rewards. Another benefit of carrying more than one card is taking advantage of rewards plans that fit your spending patterns. For example, you could use a card that offers the best grocery rewards to do all of your food shopping, a top-rated travel rewards card to book Airbnb reservations, or a designated card only for reimbursable job-related expenses. You can better manage debt. Different credit cards have different purposes, and choosing one that helps you meet financial goals may provide significant advantages. Number 4. A high credit card limit is a bad thing. Reality. On the contrary, having a higher credit limit that's managed appropriately may positively impact your credit score. In most cases, a higher limit indicates that credit reporting agencies consider you a favorable risk. But if you routinely use a large percentage of your available credit, they may interpret it to mean just the opposite, that you're overextended and a less favorable risk. Up to 30% of your credit score is based on the amount of credit you have versus the amount you've used, known as the credit utilization ratio. This ratio compares the amount of credit you're using on your cards to your overall available credit. The more credit you have and the less of it you use, the better your score. As an example, experts often recommend using 30% or less of available credit to show that you keep your balances low in proportion to your overall credit limit. For instance, if your credit limit is $5,000, you want to keep an average balance of no more than $1,500. This will become especially important starting the summer of 2022, as FICO has announced that it will apply new credit scoring models then that are expected to positively impact by as much as a 20-point increase those with the score above 680 who continue to make one-time payments and use 30% or less of their available credit each month. The new scoring system will also consider your historical usage of credit. If you've steadily reduced debt over the last 2 years, your score should increase. If you're steadily adding debt, it may drop. Those with the score under 680 who miss payments and spend close to their credit limit each month could see their scores drop by 20 points. To help lower utilization, if you had a credit card for a while and have demonstrated consistent, on-time payments while staying at 30% or less of your available credit limit, you may want to ask the credit card provider to raise the limit. Number 5. Credit cards are fraud. It's believed that other payment methods are safer than credit cards, such as debit cards. In other words, if someone were to steal your credit card, they could leave you to pay thousands in unauthorized purchases. Fact: credit cards are typically safer and more secure than other cards, such as debit cards. If your debit card is compromised, your account could be emptied and your bank could be at risk for fraud. In fact, in the event of credit card fraud, credit card holders can only be held accountable for up to $50 worth of unauthorized purchases. As you explore credit card options, consider leveraging current connections. Depending on the reason for adding a card, you may want to start comparison shopping with your current card provider, bank, credit union, or professional membership group. Why? Your existing relationship may qualify you for a better offer. Well guys, that's all we have for you today. What are your thoughts on this? Did you know about these credit card myths? Get involved and let us know in the comments section down below. If you enjoyed today's video and found it interesting, then make sure to leave us a thumbs up and don't forget to subscribe to our channel and click on the bell icon to be kept up to date with the most exciting content as soon as it's uploaded. Thanks for watching. See you again soon in another video.